By now, at the end of January in 2022, you've probably noticed that mortgage interest rates are up. But here's the kicker, guys. The Fed has not yet actually raised the interest rates, okay? They just announced yesterday that they plan on raising their rates the first time this year in March. So right now, all of these mortgage rate hikes that you're seeing are just in anticipation of this coming rate hike, okay? So if you look back just a couple months ago, the average 30-year mortgage rate for qualified buyers was around 2.7%. Now it's up to almost 4%, just like 2 months later. So that's a pretty significant increase in such a short period of time, and this was all done in anticipation of the coming rate rises. So the big question that everybody's probably wondering is, when are these rate hikes going to start make housing prices going down? Because everybody is sick of the overpriced houses on the market. Everybody's tired of the bidding wars. Everyone's tired of having to pay over market value for a home that was worth $100,000 less 1 year ago. So when are these interest rates going to start affecting the market? Now here's a couple things to keep in mind. The first thing is the rate increases we've seen so far on the 30-year fixed rate mortgages so far hasn't impacted buyer demand, which is pretty surprising considering how much it's gone up. But there's probably a consensus and a fear out there that people who are in the market to buy a house right now are probably worried about the rates going even higher, which at this point is a very legitimate concern considering the Fed announced that in March they are going to be making their first interest rate hike, and that, I guarantee you, will make the 30-year mortgage rates go even higher. Now the other thing is that whenever they do raise the interest rates, it's not going to be by much. Maybe they might raise it a quarter a point, possibly a half a point, definitely not more than that, because they don't want to rock the boat too much, because we've been on a very long, slow recovery post-pandemic and trying to get our economy back to normal. And if they raise rates too fast, too soon, then they risk throwing us right into a recession and losing all the progress that we've made up until now. However, at the same time, their goal is to fight inflation, which is out of control. It's at 7%, and we need to do something. And they really do need to raise the rates. And honestly, my opinion, what they really need to do is raise the rates no matter what, even if it does tank the economy, because it's going to hurt a little bit in the beginning because everyone will be seeing losses. You know, the stock market will go down. You know, people are going to be paying more for their mortgage, their monthly payment, but it's a short-term sacrifice for a long-term successful future of our country. Now, since the very first interest rate hike is predicted to be in March of 2022, then most likely this is when we might start to see that the mortgage interest rates start affecting the cost of housing in the US. Right now, the rates are practically at zero, and Powell just said in his recent statement that they target the rates to be around 1.6% by the end of 2023. Now that's a long ways to go. We just started 2022, and I've recently made a prediction in a recent video I did. And my prediction was that if they raise the rates and it starts tanking the economy, that the stock market starts crashing, real estate starts crashing, people start losing their jobs, start losing their homes, things like that start to happen, I almost would guarantee you that they're going to reverse their position on raising rates, and they're going to go back to having rates be at near zero. However, the problem is if they do this, then not only is inflation going to continue to remain out of control, but then we'll also be right back where we started before any type of recovery with high inflation. It's going to be a bad situation. So really, they need to stick with their course and continue to raise the interest rates, because this is going to be the only way that housing prices will come down and things will start to stabilize and return to normal. Now, I think that if buyer demand remains strong with these rate increases coming, then a couple of things are going to happen. One, prices might not come down, but they will start to stabilize because less people will be able to qualify for these higher rate mortgages. So that will eliminate some buyers who might be out there right now, or at least lower their budget. And the other thing that we really need to pay attention to is how many cash buyers are still out there, because this is actually a good thing for cash buyers, okay? When mortgage rates come down, it affects the property values, and usually the cost of housing either stabilizes or at least goes down with it. And if there's still a lot of people out there holding on to cash, waiting for bargain deals on real estate, I guarantee you we could still see housing prices continue to rise, because if regular buyers are trying to compete and get into the market before it's too late and they can't afford the payment no more, and they're competing against cash buyers, that could actually be the catalyst that keeps housing prices going up. So we really have to see over the next coming weeks how many cash buyers are out there and how many of them are going to continue to keep buying in 2022, even at these record prices, because most cash buyers want to get a deal, and right now there's not that many deals to be had. Now, I think this is going to be something interesting to keep an eye on in the coming weeks, and I'll be tracking it, and if there is an update, I'll be sure to shoot it out there for you guys and let you know if and when the housing prices start to come down, because the interest rates are getting too high, and that might start curbing demand. So far it hasn't. It's the end of January in 2022. Let's see what's going to happen by March. Maybe it will even happen even sooner, or maybe we'll all be surprised and interest rates just continue to rise along with the price of housing, which would be almost unprecedented and kind of a fun show to watch, to be honest, because this is just anything you can imagine goes right now. Now, anybody who ended up actually buying a house in 2021 might have looked like a fool at the time, but I'm telling you right now, you are one of the lucky ones, because chances are you got in at almost a record low interest rate, and you were able to capitalize on the appreciation that took place over the past 12 months. So honestly, if you did buy in 2021, you're pretty lucky, because people in 2022 might not be so lucky unless these housing prices start to come down. Now, this is a housing trend I plan on keeping an eye on in the coming weeks, especially between now and March, to see if and when these higher interest rates are supposedly going to start making housing prices coming down. As of right now, we're not seeing it, but plan on March, guys, possibly a little bit before then in anticipation, just like we're seeing right now. But until then, check out my next video on the screen right over here if you should be buying a house in 2022, and I'll see you over there.